Hello friends, welcome to my channel FinTech Logics. So today we will talk about how one-time payment works. But this scenario is a little different. We are talking about the outgoing payments from lender to borrower and not the incoming payments. So I have covered about what are the different needs of payments in lending life cycle before. If you have not seen that, please have a look. So let's begin. So what are the different use cases for such one-time payments that are to be done from lender to borrower? So those are basically disbursements. That means uh, at the when the loan starts, there is a amount that is paid from your lender to borrower as the loan amount. So that is what is called as disbursement. So normally the terminology disbursement is for one time, and when we are talking about multiple such disbursements, we normally refer that as drawdowns. So there can be multiple drawdowns on a loan as well, similar to your home loans and all. So in that case also there would be payments made by the lender to borrower. Subsequently, there can be also refunds scenario where lender has to pay any additional amount to the borrower. Now, normally these kind of payments are done either through an account transfer or a wallet transfer. So in this case, borrower's account details are actually registered with your lender. So at the time of doing a funds out, this account is used as the destination account for all these payments. So normally these accounts are verified accounts. If you remember, those accounts are verified at the time of your credit appraisal. So modes of payment should be account transfer and wallet transfer. So the process is very simple. What happens is, as a step number one, lender fetches this account information of the borrower from the loan details that is being saved earlier. Now lender would put all such requests for different borrowers in form of a batch outgoing payment file, so which will have multiple records of multiple disbursements for multiple borrowers. Normally those are collated together. If it is routed through a payment service provider, then payment service provider will take care of doing the processing. Otherwise it is processed through the lender's bank. And in some cases, as in traditional lending, it was also processed through physical mode in your POS or branch. Now step number two, lender creating payment file is completed, lender would send this for processing. So through your payment service provider or directly through your partner bank, this can be processed. Now, as a step number four, lender's bank will authorize this batch of payments, looking at the balances and all. Then lender's bank would process the settlement. So here the same terminology of interbank nostro and rostro processing comes into picture based on the terms and conditions and balance exchange rules between two banks. So here we are referring about the lender's bank and the borrower bank. The settlement would happen. So as the settlement is processed, borrower's bank would receive the fund. Normally in the scenario of RTGS, it happens real time, or it can also happen by the end of the day. And as the borrower's bank receives the fund, borrower is notified. So this is in term a very small process flow of how the lender initiated outgoing payments work. Thanks a lot viewers for watching my video.